So here we are, it is Friday at about 2:30 p.m., close to the end of the trading day, and I invested another $5,000 into my M1 Finance dividend stock portfolio, and I added two brand new stocks to this portfolio I'm excited to share with you guys. Now, before we get into that, a couple of quick things to mention. First of all, this is just for entertainment purposes only here, guys, where I am documenting myself building a $100,000 dividend stock portfolio. I am not a financial advisor, and this is not financial advice, and you should always do your own due diligence before you yourself invest in the stock market. And the other thing I want to mention as well here is if you are interested in learning more about M1 Finance, the platform I use for investing, I have a free training down in the description below that walks you through step by step how to sign up for this brokerage. And full transparency here, guys, I am affiliated with M1 Finance, so I may earn a small commission if you use my link. That being said, guys, let's get into my portfolio, do an update on the two new stocks, look at my holdings, and then briefly talk about a couple of changes I have made going forward for this investment portfolio. So first of all, one thing I want to show you guys here is that we have started earning our first dividends from this portfolio, and even though it is a small amount of money, it really is getting me excited because that is one of my favorite parts about dividend investing, is that even when you are in fact in a bear market, you are still able to earn dividends from your company, which gives you new money to be invested if you're reinvesting those dividends, and it's a way for generating returns even when you are in a bear market. So on March 10th, I earned a $24.87 dividend from IBM, which was reinvested into the portfolio. You can see that right here, that money went into National Grid stock based on whatever I was low in. And then I also earned two dividends today, $22.76 from 3M, as well as $21.13 from Walgreens Boots Alliance. So it's pretty exciting here to me that basically in the last 3 days or so, I've earned about $65 in dividends, which is truly passive income being reinvested into my portfolio. Then on March 12th, I deposited an additional $5,000 into this account, which was deployed today being March 13th, and it went into three particular stocks here. Number one, I increased my allocation to National Grid stock just because that's a defensive play, and it's a stock I want to have more of in my portfolio during this time of uncertainty. And then I added two brand new stocks to this portfolio, which we'll talk about very briefly here, which are Boeing as well as Genuine Parts Company. I'm sure we've all heard of Boeing before, but GPC may be one that you're not familiar with, but if you've ever heard of the Napa Auto Parts, that is the parent company that owns Napa. And so that was a new dividend aristocrat I've added to my investment portfolio. So if we look at my holdings tab here, guys, you can see that there is a lot of red in my portfolio. Obviously, GE being the largest position here is down the most, down 47.83%. I've talked about General Electric all the time here in the last couple of videos. If you're not familiar with that position, check back on my older videos. This is a stock I bought back in 2017, and I will apologize because I wasn't really thinking when I transferred this into my portfolio, because I had said earlier I was building this portfolio from scratch, and it was kind of unfair of me to move this into this portfolio. So that was a misstep on my part. I apologize, guys. But all of the other investments is going to be new money flowing into this portfolio, building this up. There will be no more stocks transferred in. IBM down 21.5%, down quite a bit in 3M, around 22, down 14% or so in Walgreens. American Airlines down 23%, Dunkin' Donuts down 12.3%, National Grid down 10. And that's one of the reasons why I like this stock in particular, is because it doesn't really move as much as the market, because this is a very defensive investment. Delta Airlines down 16.5%, Microsoft down 10%. We are down 8% in Apple, down 3.7% in GPC, which was purchased this morning, and barely up anything in Boeing stock. So overall, looking at my portfolio, I am down $10,717.09, down 27%. And looking at numbers like this, guys, it can begin to look scary. And some people may be worried that they're making mistakes if their portfolio looks like this. And a lot of you may just think that I'm bad at investing. And I totally understand that, and I respect your opinion. But it does take, a certain amount of courage to plaster your losses all over social media and on YouTube. But whether or not I'm making good moves or bad moves in the market, I like to be as transparent as possible with you guys. That way you can learn from my successes as well as my mistakes and anything in between. So as far as myself personally, I'm focused on, the 5 to 10 year outlook for most of these companies, excluding the airlines. Like I said, I may not hold those that long, but every other stock here I like for the next 5 to 10 years at minimum, and I'm going to continue earning dividends from these stocks, which will allow me to get returns over time. So I'm not so much focused on what the price does in the short term, because based on all the news coming out about the virus, nobody has any idea where the market is heading, and it's kind of useless to try to guess or plan that. And a lot of people are just sitting on the sidelines waiting to get started with the investing. And while that is a good idea to have some cash on the sidelines, at a certain point you have to say, you know what, I'm going to start diving in and dollar cost averaging. Otherwise, you may find that you're just sitting on the sidelines and waiting to invest. And opportunities like this come and go. I'm not saying the markets won't go lower, they probably will, but at a certain point you just have to say, all right, I'm going to dive in and I'm going to begin investing. And if it goes down in the short term, you have a long-term outlook. And I think, this is not a time where I would personally be involved with unprofitable companies or growth stocks. But as far as blue chips and dividend aristocrats, in my opinion, I think this is a great buying opportunity. And that is why I am, putting my money where my mouth is and dropping a lot of money into this portfolio. Now, I did make one additional major change to this portfolio, aside from bumping up my allocation in National Grid, which is now 20% of my portfolio. What I also did is I bumped up the amount of money I am depositing every single Monday. So if you're familiar with the progress so far of this portfolio, I've been investing $500 per week on every Monday, and what I decided to do is I bumped that up to $2,500 per week. So I will now be investing $10,000 per month into my investment portfolio. And I'm in a position where I am comfortable doing that, and I could do that for many, many months going forward and not be worried about dumping too much money into the market. And that is because I have a lot of idle cash sitting on the sidelines. So going forward, I'm probably going to have less of that lump sum investing unless I see particular opportunities I want to dive into, and I'll be doing more of a dollar cost averaging like I was, but just with a larger amount going in each and every week. Now, just before jumping on and recording this video, I also just found out that my home state, New York, is now the #1 state in the US for the virus. But to be honest with you guys, I'm just following the basic, guidelines we've had of washing your hands, don't touch your face, and, take practice with not being out in public as much, and social distancing measures. I'm not very concerned about myself as a healthy adult, but it is kind of wild to be in New York at this point in time. All of the stores are pretty barren, no toilet paper to be found anywhere. But in the long term, guys, I don't think this is going to be something that we're going to be talking about 1 to 2 years down the road, or maybe even by fall. It could be old news for sure. But that being said, guys, let's briefly jump into the 2 new additions to my portfolio and talk about those particular stocks. So Boeing is a stock I have been waiting to buy since 2017, and in a second here we'll look at the price chart and I'll show you why I waited until now to begin purchasing this stock. I think it's a great company to own, and it's one I've been watching for a very long time, and it recently went into an absolute nosedive, which we'll take a look at right now. So over the last 5 days alone, Boeing dropped 35.42%. Over the last month, they're down 54.83%. And if we look at the 5-year chart here, you'll see what has gone on with this company. They're approaching what may be their 5-year low if they continue going down to somewhere around 108 per share. But this is a stock that was just trading, like crazy. It was a stock that rarely ever went on sale. We did catch a small sale there in early 2019, but again, not that much because it was still trading in the $300 per share share range. So now seeing Boeing at $169.50 per share, this to me is a stock I want to dive into head first. And there's a couple of reasons why I like Boeing as an investment. So first of all, over 600 different companies supply parts to Boeing, and they're also one of the largest independent contractors for the US government. And in 2017, I believe it was $22 billion is how much money the government spent with Boeing out of their defense spending budget. So in terms of companies likely to be bailed out by the US government, I would personally put this very high on my list because of the relationship Boeing has with the US government. They're very essential to ongoing operations and defense spending. So I think that it's very likely that it would be bailed out in a worst case scenario. And also because of the number of companies that supply parts to them, the fallout if this company were to fail would be absolutely massive. So the reasons for Boeing stock falling should be pretty obvious. First of all, we have the grounding of the 737 MAX aircraft, which was over 1 year ago after 2 of those airplanes crashed. So they're sitting on inventory that can't be delivered until the FAA allows these planes to fly here. Second of all, because of the decline in demand in the airline industry, a lot of airlines are grounding aircrafts themselves, and this is going to affect the number of planes they are ordering in the near future. Boeing operates on a backlog, and it's a pretty sure bet that that backlog is going to shrink as the airlines have to cut down on their spending. One of the first things they're going to do is stopping ordering of new aircrafts that are going to be delivered at a future date. Then we had JP Morgan downgrade this stock from a 370 price target to a 210 price target, and that essentially is what largely sparked this free fall, not to mention the broad market was correcting, and in my opinion, it went into a totally oversold condition in a very short period of time. This is a very high quality company that people have been investing in for decades, and based on what I'm seeing here, in my opinion, I like the look of this stock, and so I added it to my investment portfolio. Now, in the short term, probably going to have to cut dividends, probably going to have to take some drastic measures, but I think in the long term, it's a tremendous stock to own with a proven track record, and this price is very appealing to me. So then we have this other company here called Genuine Parts Company. It's one that not many people are familiar with, but a lot of people are familiar with the automotive parts arm of this company, which is Napa Auto Parts. So we'll talk more about this stock when I do my formal portfolio update at the end of the month, but for now, I'll just go ahead and read this description for you guys. Genuine Parts sells automotive parts, 56% of their sales in 2018, industrial components, and business products. The company sells vehicle parts to commercial and retail customers through over 9,400 stores worldwide, most of which are independently owned. Its industrial unit supplies bearings, power transmission, industrial automation, hydraulic, and pneumatic components to maintenance repair and OEM clients. Now, this is what you call a defensive investment here, because what you're going to see if we are in a recession and people aren't spending money, one of the first things people will do is stop buying new vehicles, and as a result, they're going to be maintaining their older vehicles, which would help Napa for sure, as more people are buying auto parts or more garages are buying auto parts while they fix vehicles. They're a dividend aristocrat, they're a lesser known name, and they currently pay a 4.03% dividend yield. If we look at the stock over the last month, it's basically fallen just as the market has, down 19%. And over the last 5 years, it's pretty much just a stock that oscillates back and forth between a couple of different price ranges here. So it's kind of a boring investment. It reminds me of AT&T, where it just trades laterally and does very little. But at times of uncertainty, these boring investments and these recession-proof investments can be a wise choice, because boring is good during times of uncertainty. So they're a new addition to my portfolio. I'm excited to buy more shares and earn that dividend yield and earn that compound interest through the reinvesting of dividends. So going forward with this portfolio, as I said, I'll be investing $2,500 per week, $10,000 per month, maybe more if I see opportunities to add more money to my portfolio lump sum. As far as stocks I'm purchasing, I'm mainly going to focus on these dividend aristocrats, which are companies that have grown their dividends for 25 years or more consecutively. And I now have 3 dividend aristocrats in my portfolio. First of all, Walgreens Boots Alliance has a 43-year 56-year dividend growth streak. 3M is another dividend aristocrat with a 56-year dividend growth streak, and now Genuine Parts Company, a third dividend aristocrat with a 56-year dividend growth streak. Now, I was thinking next week that I might do a video exclusively on dividend aristocrats, and if you guys want to see that video, drop me a comment down below just so I know if there's any interest in that. I think this is a good time to talk about dividend aristocrats during times of uncertainty when people are looking for safer, more recession-proof investments. But anyways, guys, that's going to wrap up this update. I hope you enjoyed it. Drop me a comment down below. I will do my best to respond to each and every one. As always, the free training and link to sign up for M1 is down below if you want to support the channel and give back to me. But thanks so much for watching, guys, and I will see you in the next video.